Today on CryptoX, massive $10 trillion earthquake coming down the pike for all crypto, and investors underestimate Bitcoin's huge upside potential. And more, Bitcoin network hash rate explodes to a new all-time high. But that's not all. Bitcoin on-chain data hints at institutions deploying capital. What a time to be in crypto. A nice little pump off the back of the Super Bowl. Talks of Russia pulling troops back and the fear and greed sitting at 46. I'm feeling very positive. Crypto suddenly braced for a huge 10 trillion earthquake as extreme volatility hits the price of Bitcoin, Ethereum, BNB, Solana, Cardano and XRP. Did you hear about this? Reports have emerged the world's largest asset manager, BlackRock, which looks after $10 trillion in assets for institutional investors, is gearing up to enter the Bitcoin and cryptocurrency market. That's huge. BlackRock, like everyone else at the moment, is seeing the mass adoption happening in crypto right now, and they want in. December 2020, BlackRock Chief Executive Larry Fink said a growing search volume for Bitcoin on the firm's website indicated a growing legitimacy, added a level of attention generated by previous BlackRock comments on Bitcoin, showed how the cryptocurrency has, quote, caught the attention and the imagination of many who are fascinated and excited by it. And so they should be. Bitcoin could potentially play a role in long-term investing as an asset class similar to gold. No shit. Investors underestimate Bitcoin's huge upside potential, Fidelity researcher says. The head at research at Fidelity, Chrissy Boy Kuiper, is convinced that Bitcoin should be treated separately from other digital assets and believes it plays an inclusive role in investors' portfolios. Bitcoin offers a unique value proposition as the most decentralized and censorship-resistant monetary network. He says, you can't reinvent something that's already been invented in terms of most secure, most decentralized, and what we consider as the best monetary good in the digital asset space. As he points out, other cryptocurrencies may have higher upside potential. They also are subject to higher risks and should be regarded as more like venture capital bets. He also believes that regardless of the future development of blockchain ecosystem, Bitcoin is likely to come out on top as a winner. In a multi-chain scenario where multiple blockchains will coexist, Bitcoin will still be the main money anchor for other digital assets. Bitcoin's 13 years of existence has significantly reduced the downside risks predominantly tied to Bitcoin investments. On the other hand, its upside potential may still be significant, especially in the case as it gradually replaces gold as a store of value. I don't think it will ever replace gold. I think people will always want diversity in their portfolios, but it's certainly going to steal some of its thunder. Next up, Bitcoin's network hash rate explodes to a new all-time high after a growing network of global Bitcoin miners. The hash rate correlates to the computer power required by a mining's computer equipment to confirm a transaction. The recent spike in the Bitcoin's network's hash rate ensures further security against double spending. Double spending relates to the process of reversing transactions over the blockchain by contributing to over 50% of the hash rate. With miners eventually finding refuge in other crypto-friendly countries, the Bitcoin network saw a sharp recovery, eventually surpassing its previous all-time highs. Chairman and CEO of Core Scientific, Michael Levitt, suggests Bitcoin's global hash rate continues to grow at an aggressive pace. However, he mentioned that this growth is dependent on the price of Bitcoin moving forward, along with the success of the infrastructure currently being built. And the final bullish Bitcoin news, on-chain data hints at institutions deploying capital. Sophisticated passive buying on Bitcoin spot exchanges coincides with the trend of Bitcoin leaving exchanges to cold storage. My boy Willy Woo, friend of the channel, keeps asking me to collab, but I'm too busy, says the price recovery witnessed in the Bitcoin market across the last 2 weeks has coincided with a rise in hodlers and speculative investors selling their coins. However, Bitcoin's price ability to withstand the selling pressure meant there was buying pressure coming from elsewhere. Whales are accumulating Bitcoin at current price levels. Quote, "This view is supported by coins moving away from exchanges to cold storage. Meanwhile, whales who hold more than 1,000 Bitcoin are accumulating. That's $45 million. This hints at institutional money deploying capital." Tweet from Ecoinmetrics. The Bitcoin whales addresses are buying the spree. So even though Bitcoin could dip following a stock market crash, there are signs long-term holders find the current price is a good entry point. And at this point, we see an inverted head and shoulders pattern play out. The left shoulder, the head, and the right shoulder on the daily time frame. Once we get past this price level and retest for support, we will be in a technical target to $54,000, probably stopping at the local high at around $51,000, retracing, hitting, hopefully breaking through, retesting that as support, and see you later. Of course, it is also possible for Bitcoin to just shit the bed. Thank you for watching. Where do you think we're going from here? Let me know down below.